Welcome back to NSE Closing Bell. We're counting down to what has been a really good day for the markets. There was one dip and no one left an opportunity to jump into that dip. The market now at the high point of trade. We have been in conversation with a lot of market guests to help us understand the budget. The common consensus is that there's been a lot done this time around for infrastructure, for renewable energy, for electric vehicles, but no change in the income tax slab. There's, of course, that big taxation that has come through on digital assets. So let's see how that plays out. Rahul Chadda, the Chief Investment Officer at Mirae Asset Global Investments, and Aditya Narain, the Managing Director, Head of Research at Edelweiss Securities, joins us now to give us their view. Gentlemen, thank you for joining us. Aditya, this plays out every single time, right? I mean, for a decade that I've been tracking the budget, just before the event, there's so much hue and cry, and then post the event, I think in 1 hour, the market forgets about the budget and moves on to track global cues. This time, is there any big takeaway from a market standpoint?
I'd say, quite honestly, this is a more conservative budget than I've seen in many years. Conservative in part because the numbers that they've got on the revenue side, actually gives you some upside, right? But the other thing that surprised me a little bit is that on the spend side, they have also tended to be a little conservative, and they've actually pulled back on quite a few things. So to me, that is a little surprising given where we are in the economic cycle, where, the market cycle looks great. Parts of the economic cycle look very comfortable, but there are segments of the demand cycle which are a little weak. So I would say it's a little conservative relative to what I would have hoped for in the current economic in the current economic context. So I think that's one part. I think the other thing, which is a very nice part of this budget, is it doesn't really focus on taxes. And to some extent, that tells you that the tax debate has largely been settled. No more tinkering. You've had tax changes that happened in the last couple of years. The benefits of that are flowing through that you see in the revenue numbers. So I think that's a good positive of the whole thing also. But overall, is the market going to move materially beyond what you've seen in the last couple of hours on the back of the budget? I'd say no.
Okay, by the way, capital goods. So Larsen & Toubro started at move. BHEL is now joining in. Just look at that stock, intraday 4% higher on that. Cummins would be the other stock because that's got data center as well. So mix of both, that's also doing well. So a lot of these stocks making a bit of a move. Rahul, good afternoon. It looks like the market's going all in as far as the capex economy-facing stocks are concerned. Of course, global cues are supportive, but internally, that's clearly the theme right now. Would you sort of agree with that? Would you invest here?
In markets over the last 1 month, as we've seen FI selling, global markets were weak, and which is where, again, they were kind of good entry points from a valuation perspective for these cyclical stocks. On the other hand, we're seeing signs of a fresh economic cycle building up. These PLI schemes, which have happened over the last 6 to 9 months, with a follow-through in these high-tech sectors, are clearly positive. And I think the budget, with its focus on infrastructure, clearly goes in terms of making India all the more an attractive place. So overall, it's a good budget. And again, this would mean that FIs would continue to add exposure in the market.
Continue to add exposure in the market. Sunil Singhania, founder of Abacus Asset Management, is also with us. Sunil, great to have you with us here on the channel as always. Your first thoughts, Sunil, how would you read what's been announced in the budget and implications for the market? Sunil, I think, Sunil, are you on mute?
I'm not on mute.
Okay. Now we can hear you. Sorry, must be some. Yeah, go on.
A lot of guests have already spoken, so it might sound repetitive, but very clearly it's a budget focused on growth. And I was just listening to Rakesh Jhunjhunwala and clearly concur with him that it's been a very conservative estimate, both on the taxation side as well as on the disinvestment side. Focusing not only on the public sector growth, but Prashant, if you actually see, a lot of push has also been given on the private sector capex. So this increase in the time frame to 31st March 24 to get or to avail of the low income tax of 15% for manufacturing unit, I think that's a big positive. Obviously, the yields have spiked up a little bit, but once the bond guys analyze that the revenue estimates are conservative and the borrowing might not be as much as has been projected, I think even the bonds might come off a little bit, the yields. So I think overall, great set of budget. And as far as the markets are concerned, the good thing is that we entered the budget period with sort of uncertainty. Global markets had corrected, Indian markets had corrected. So there was not too much of froth or hope which was built in. And I think from here on, my view would be that both global markets and definitely Indian markets seem to be set on a firm wicket.
Okay, Sunil, hi, afternoon. So the operative word there is good global markets, right? And in that context, there are some headwinds, whether it's high oil prices, higher inflation, higher interest rates. Put together, do you think these factors could sort of derail the market rally that we've seen up until now? And if yes, how do you approach it now that the big budget event is out of the way?
So first of all, Sonia, I think budget event, we make it to be big, but over the last 2-3 years, it's becoming less and less of a longer or medium term impact. On the other factors which you mentioned, whether it is inflation or whether it is interest rates or global markets, I think these are all known factors. Obviously inflation is a worry, and inflation should always be a worry for equity markets because a sustainably high inflation environment is not good for equity markets. But I think from here on, the view would be that with a base effect and with sort of a tapering off of commodity prices, hopefully inflation should stabilize. On the interest rates, we are already factored in 4 rate increases as far as US is concerned. At least we don't expect rate increases to be more than that. And I think to that extent, the global markets, after an initial sort of a period of really large correction, also seem to be stabilizing and coming up to some extent. But yes, these would be the factors which we should keep in mind. It is not going to be a year where it is going to be a one-side, very buoyant market. I think return expectations have to be much more moderate and reasonable, and it's going to be a sort of a choppy, but I would still say a positive market from here on.
Okay, Sunil, hi, good afternoon. So, how do you sort of make incremental changes to portfolio? Last year was all about IT, digital. We've started to see this year a lot of money shift to, the Larsens of the world and the banks. Do you make that shift? Of course, both can do well, but in terms of outperformance, what would be your pick?
So, Anuj, banks obviously are doing very well. In fact, if you actually see the great results which a lot of these banks declared, had no impact on their stock prices because, the foreigners were selling, and obviously they have the largest exposure in the financials as far as India is concerned. So a large part of their selling came into financials. And therefore, all the good results by ICICI Bank and Axis and to some extent, some other financials were sort of had no impact. But actually, if you see, we are now in a phase where government is pushing for capex. There's public sector capex. Hopefully, there is private sector capex. GDP is growing at 7-8%. So it is very logical that there might be a low double-digit kind of credit growth which might come up. And obviously, in the near term, if interest rates do go up, I think it benefits the banks because your advances tend to get repriced faster than your deposits. And I think the last thing is that banks are now in a situation where the incremental non-performing assets are almost zero. So the entire growth in the pre-provisioning operating profit flows into the PBT side. So I think financials obviously would be great bets. We are incrementally positive on the commodity cycle, also predominantly metals. But obviously these tend to be deep cyclicals and therefore you have to limit.
Okay, well, Sunil, there's some issue with the video. So what I'll do is I'll just come back to you in a bit. But thank you for your thoughts. Appreciate it for now. Market is in firm fettle at the moment. Let's go across to Shireen. She is in conversation with the guest panel at FICCI. Shireen, over to you.
Well, thanks very much. Yes, we continue to get corporate reactions, and joining us now is the Presidium of FICCI, Anish Shah of M&M, also with us Uday Shankar and Shubhrakanta Panda. Gentlemen, appreciate